Good morning, everyone. Thank you for giving us the opportunity to present here today. We are Goldman Sachs, a student run asset management firm with a learning focused investment approach. Before we discuss our portfolio and performance, allow me to introduce myself. My name is Kayla Adina. Today, I am joined with my teammates Joy Daniel Bangun, Kanya Azra, Nashwa Nur Amila, and Kifine. I'd like to begin today's presentation with a snapshot of what Golden Snacks really represents. Golden Snacks is not your typical student run asset management firm. Our investment philosophy is about taking small and deliberate bites. We specialize in short investment cycles that deliver both experience and insight. And we believe that investing should be disciplined, agile, and sustainable. We test strategies, adapt to market shifts, and prove that even small allocations can deliver meaningful value. At Golden Snacks, we don't feast on the market, we snack wisely, savoring each opportunity while learning to craft a bigger meal in the future. This will shape us into more thoughtful, adaptive, and confident investors, fully prepared when it's time for the main course.
At Goldman Sachs, our primary objective is to develop discipline and agile investor through real hands-on portfolio management. We believe meaningful learning comes from making actual investment decisions, which understanding risk, managing uncertainty, and evaluating outcomes within a controlled environment. To support this objective, we adopt a short-term equity strategy with a 12-week investment horizon. The portfolio is managed with a focus on liquidity, sector diversification, and fundamentally sound stock, allowing us to stay flexible while controlling downside risk. By balancing defensive position with selective exposure to cyclical sector, our strategy ensures that every investment decision remain aligned with our learning-driven mandate, structured, intentional, and adaptive to market condition.
In week one, we use top-down and stock-specific approach to choose our investment in line with our short-term portfolio goal. At this stage, our main focus was to build a portfolio that is diversified, liquid, and has controlled risk. Based on liquidity, stable fundamental, and short-term price potential, we select our four Indonesian stock, Bank Sentral Asia, PT Solusi Sinergi Digital, Aneka Tambang, and Bank Mandiri. This stock come from different sector. The first one is financial, technology, and materials, which helps us to keep the portfolio balance. From a total capital of 5 million rupiah, we invest around 3,360,000 rupiah in these stocks and keep the rest as cash. This allows us to stay flexible and future rebalancing. By the end of the first week, the portfolio value increased around 3,400,000 rupiah, resulting in a positive net present value about 35,964 rupiah. This shows us that our initial screening strategy worked well and give us a strong starting point to the next stage.
Okay. We started with a 5 million rupiah asset under management and allocated across banking, commodities, and other selected growth stocks. The allocation was designed to balance defensive names with higher beta opportunities while keeping a portion in cash. This cash position allowed us to stay flexible, managing risk, and respond quickly to market opportunities. Next. This slide highlights how we actively manage and rotated the portfolio on a weekly basis. For example, we took profits on Wi-Fi after the tender-driven rally to avoid increasing retail selling pressure, and we also increased exposure to gold-related stocks like Antam and RT as our gold thesis strengthened. In Bumi, we held through consolidation and exited after a confirmed breakout, locking in more than 35% profit. Next. On a weekly basis, returns were volatile, which is expected in a short-term active strategy. However, when viewed cumulatively, the portfolio remained resilient and continued to recover after drawdowns. By the end of the period, we achieved a total return of 10.7%, reflecting disciplined risk management. Next. When compared to benchmarks, our portfolio performed competitively and outperformed during several periods. This indicates that our performance was driven mainly by sector allocation, stock selection, and timing, rather than simply following market movements. Overall, the strategy demonstrated our ability to generate alpha within a short investment cycle.
Okay, now after 12 weeks of work from Goldman Sachs, I will present our performance summary. Our portfolio focuses on balancing systematic risk with active value creation. As you can see from our core metrics, we achieve a trainer measure of negative 0.86% due to our unique negative beta profile. However, our Sharpe ratio stands at strong 21%, which now significantly outperforms domestic benchmarks like the IHSG and LQ45. We also maintain a high positive Jensen's alpha of 0.69%. This confirms that our active management successfully generated value where domestic indices produce negative alpha instead. Next. Moving into the details of our systematic efficiency, the Goldman Sachs portfolio demonstrates a unique defensive profile. This performance is primarily driven by our beta of negative 0.86, which indicates an inverse sensitivity and serves as a strong defensive hedge against market volatility. Effectively, because our beta is negative, our portfolio moves independently of broader market trends. I would also like to note that for our benchmark comparison, the Nikkei used a different risk-free rate to reflect the specific interest rate environment of the Japanese market. Next. When we look at the total risk through the Sharpe measure, we see a very positive narrative. We recorded a standard deviation of 3.61%, which is much more stable and competitive compared to the IHSG at 3.5%. This improved efficiency, and it is why our Sharpe ratio of 21% now leads the benchmarks. Because our risk-adjusted return is optimized, we have successfully offset the total risk taken. This indicates that our diversification strategy has effectively minimized idiosyncratic risk compared to previous stages. Next. Next, we look at Jensen's alpha measure, which tracks our ability to find abnormal returns. We achieve a strong positive alpha of 0.69%, confirming that our performance significantly exceeded theoretical CAPM expectations. This is a very recent result compared to the IHSG and LQ45 again, which both failed to meet risk-adjusted expectations. Achieving such a high alpha while maintaining negative beta profile proves that our team has been highly effective in independent security selection. Next, for the final, let's look at our net asset value or NAV and ownership structure. Our total assets grew from an initial 5 million to a pre-money value of 5.5 million rupiah. This increased our NAV per unit from 1,000 with 10.7% gain for our partners. In this case study, a new investor enters by purchasing 100 units, contributing 100,000 rupiah. This brings our new total asset under management to 5.6% with total of 5,100 units. Consequently, our individual stakes move from 20% to around 19%, while the new investor captures 1.96% share.
In this portfolio, we have demonstrated how disciplined strategy, structure analysis, and continuous learning guide every investment decision we make. As Warren Buffett said, risk comes from not knowing what you're doing. That's why at Goldman Sachs, every small investment is intentional. We learn through disciplined decision, manage risk with clarity, and prepare ourselves to take bigger steps in the future. That's all from us. Thank you.
Hello, my name is National Ramila, and today I will present my individual report for Goldman Sachs Week 2. Okay, we are gonna move into the week 2 from 29 September to 3rd October 2025. The Goldman Sachs portfolio show a positive result even though the each stock moved differently during this week. The portfolio value increased from 5,035,964 rupiah to 5,158,533 rupiah. This means the portfolio gained 2.5% in 1 week, with a cash balance of 682,033 rupiah at the end of the week. Looking at the individual stock, Bank Sentral Asia, as we know as BCA, experienced a small decline of 1.3%. This was mainly due to short-term movement in the banking sector, and the stock still play an important role as a stable asset in the portfolio. And the PT Solusi Sinergi Digital or Wi-Fi became the best performing stock. It gained 19.4% as the price reached from 2,630 to 3,140. The stock gave the biggest contribution to the portfolio gain. And the next one from Aneka Tambang show relative stable movement. The first position declined slight 0.3%, while the new position gained 0.6%. This shows that Antam role in keeping portfolio diversified. And the last one is Bank Mandiri recorded a loss of 2.5%, which was in line with the short-term weakness in the banking stock and did not reflect any major problem in the company. Okay, for the next one. Okay, overall gains from Wi-Fi and the stable performance from Antam were enough to cover loss from banking stock, so the portfolio is still increased. And for rebalancing, we took conservative approach. All existing position we keep because the risk was still under control. We also add more Antam to improve the diversification, and no stock were sold during this week. From a risk perspective, the portfolio remained well diversified with a control risk and enough cash. This gives flexibility for future decisions while staying aligned with the short-term investment goals. Okay, that's all from me. Thank you very much.
Good morning. Thank you for giving me the opportunity to present today my individual report on Goldman Sachs. My name is Kayla Dinawarda Mulia, name 190230055 from Group 16 of the Capital Market course. During this presentation, I will be discussing the portfolio management for week 3. This is a snapshot overview of what happened during week 3. Week 3 is the period between 6 October to the 10th October 2025, and the portfolio focused on initial performance evaluation following stock screening and position allocation from the week before. This week marked the first phase of observing how our selected stocks performed under real market conditions. And as a result, the portfolio value increased from 5.158 million rupiah to 5.437 million rupiah, representing a weekly gain of 5.40%. This positive outcome indicates that the initial screening and allocation strategy we set was effective within our short-term investment horizon. Positive performance was primarily driven by PT Solusi Sinergi Digital Tbk, Wi-Fi, and Aneka Tambang Tbk, Anta. Wi-Fi delivered the strongest contribution of 25.2% gain, reflecting strong short-term price momentum, while Antam provided a steady gain of 3.4% that supported diversification within the materials section. These gains were able to offset minor declines in the banking sector holdings, primarily from Bank Central Asia and Bank Mandiri. During this time, the portfolio maintained a cash balance of 682,000 rupiah, which reflects wise liquidity management. The cash reserve was intentionally preserved to limit risk exposure and provide flexibility for future adjustments. Overall, the net asset value at the end of week 3 stood at 5.437033 million rupiah, confirming a solid start to the portfolio following its formation. Moving on to the portfolio actions that happened during this week. All positions were classified as keep and maintain during week 3. This decision was taken because no stock showed excessive loss that required immediate rebalancing or any abnormal price movements that would be of concern. The positive portfolio return indicated that the initial screening and allocation strategy was effective. Maintaining all positions allowed sufficient time to properly evaluate performance, volatility, and contribution across holdings. And the positive overall return further supported the decision to avoid premature adjustments and instead focus on observation and risk monitoring. From a risk perspective, Exposure remained controlled through diversification across sectors and the maintenance of a cash reserve. Core holdings such as BBCA and BMRE contributed stability, while Wi-Fi and Antam provided growth and diversification benefits. Looking ahead, the portfolio will continue to be monitored on a week-to-week basis, with emphasis on momentum sustainability and downside risk. Rebalancing actions will be considered if performance trends change or if risk exposure becomes concentrated. In summary, week 3 served as a validation phase for initial strategy, providing a strong performance baseline and setting the foundation for more active portfolio management in subsequent weeks. I thank you for your time and attention. I hope you have a wonderful day.
In investing, not every week is about making profits. Some weeks are about protecting what you already have. Hello everyone, my name is Kania Azra Putri Valeti from Group 16 from Goldman Sachs Company. And in this section, I will walk you through our Week 4 portfolio analysis. So Week 4 marked a shift in focus from return maximization to risk control and selective rebalancing as the portfolio faced short-term volatility and stock-specific correction. So during week 4, from 13 to 17 October 2025, the Goldman Sachs portfolio experienced a correction driven by divergent stock level performance. The portfolio value declined from 5.44 million to 5.17 million Indonesian rupiah, representing a weekly drawdown of 4.76% or approximately 259,000 rupiah. This decline was primarily driven by sharp underperformance in PT Solusi Sinergi Digital or Wi-Fi, which recorded a significant momentum reversal as well as continued weakness in PT Bumi Resource or Bumi. However, despite the decline in asset value, portfolio liquidity improved significantly. By the end of the week, cash holding reached 1.6 million rupiah, providing flexibility and allowing the portfolio to respond strategically rather than reactively. This liquidity buffer become a key foundation for controlled tactical adjustment in the following action. And now let's move into our rebalancing action. So week 4 focus on capital preservation under short-term volatility rather than an aggressive portfolio rotation. On the sell side, the first one is PT Solusi Sinar Digital or Wi-Fi was exceeded after experiencing a minus 23.16% week-to-week decline, with the price falling from 3,932 to 3,020. This sharp drop signaled weakening momentum and elevated downside risk, making the position inefficient to hold within a short-term investment horizon. The exit helped limit further drawdown and released approximately 906,000 in cash back into our portfolio. The second one is Bank Mandiri Persero or BMRI, was also sold following a minus 0.94% decline. And this decision wasn't driven by fundamentals only, but by short-term price consolidation and opportunity cost consideration, while maintaining Bank Sentral Asia or BPCA as our core banking exposure. On the buy side, the portfolio added PT Bumi Resource or Bumi as a tactical energy exposure, which was supported by high trading activity and liquidity in coal-related stock during the period. Although Bumi closed the week with temporary unrealized loss of minus 8.72%, the position was sized conservatively to manage portfolio risk and avoid excessive concentration. Overall, this action reflects a selective rebalancing and not an aggressive trading. For position that we choose to keep is the first one is Bank Sentral Asia or BBCA, which delivered a positive 1.35% weekly return, reinforcing its role as a low volatility, large cap anchor within the portfolio. Meanwhile, for the Aneka Tambang or Antam, posted a 4.23% gain, contributing positively while enhancing sector diversification within the material segment, which both position help stabilize the portfolio amid the broader volatility. And the impact of our week 4 rebalancing is the first one is reduce exposure to short-term underperformers, preserve stable core holdings, and improve portfolio liquidity and flexibility. From a risk and strategic outlook, week 4 positioned the portfolio more defensively with higher cash levels and disciplined risk control. And this setup allowed for selective re-entry opportunities in subsequent weeks while keeping downside risk contained, which fully aligned with Goldman Sachs' short-term investment mandate. At Goldman Sachs, every move is a small bite, but deliberate bite. Focus on managing the risk today while learning to invest better tomorrow. And that's conclude our week 4 analysis. Thank you.
Good day, everyone. I'm Kevin, and today I will present the Week 5 performance of the Goldman Sachs portfolio, covering the period from October 20th and to 24th, 2025. This week was a stabilization phase for us. We started the week with an initial value of approximately 5.169 million and ended with 5.174 million, reflecting a marginal weekly gain of 0.1% or about 5,000 rupiah. The primary drivers of this performance were a significant rally in BBCA, which gained over 10% and a rebound in Bumi at 4%. These gains were crucial as they compensated for short-term corrections we faced in the mining sector. To support a more growth-oriented stance, we strategically deployed our capital into new positions, which reduced our cash at hand to approximately 677.97 rupiah by the end of the week. Moving on to our rebalancing actions, specifically our buy decisions, this week we shifted from a defensive, liquidity-heavy stance to an active, growth-oriented strategy. First, we initiated a tactical entry into RC Indonesia or RC ticker, acquiring 300 shares at 280 rupiah. Although it ended the week with 7% unrealized loss, this move was a strategic play to diversify our materials segment with pure play gold mining, acting as a hedge against market volatility. Secondly, we added to our position in ANTM by purchasing an additional 200 shares at 3,210 rupiah. Even though this specific tranche dipped slightly by the end of the week, it was a move to strengthen our core mining weight and capitalize on the stock's long-term liquidity. Overall, these buys increased our portfolio's market beta, positioning us to capture potential upside in the commodity sector. Now, let's look at the key positions that anchored our portfolio. BBCA remained our strongest asset, delivering an impressive weekly return of 10.33% or roughly 7,500 rupiah. This performance was vital as it effectively neutralized the temporary drawdowns from our newly acquired mining positions. At the same time, Bumi Resources validated our tactical buy from the previous week by rebounding with a 4.69% gain, showing great resilience in the energy sector. We also maintain our existing tranche of ANTM to preserve exposure to the material cycle. Retaining these high-performing and liquid assets is what allowed us to achieve that positive stock level return of 0.10% week on week. Looking ahead, our main risk is sector concentration in mining, which is very sensitive to global commodity price shifts. For week 6, our strategy will be to maintain disciplined monitoring of our mining tranches while keeping BBCA as our core anchor to protect our gains. To conclude, I also like to share my personal reflections on managing this portfolio. Overall, I'm highly satisfied with our strategic pivot in week 5. And overall, moving from a defensive stance to an active buy and weakness strategy allowed us to maintain a positive return despite the turbulence in the mining sector. The best part of the process for me was executing those tactical entries into RG and INTM while seeing BBCA act as a powerful growth regime engine for the whole portfolio. On the other hand, the part I liked the least was seeing the immediate impact on our NAV from transaction fees and entry point adjustments during the 12-week time frame. It really highlighted how sensitive short-term trading is to cost. If I could repeat the process, I would focus on enhancing our entry point timing through more rigorous technical analysis, especially for volatile stocks like RG. I would also look to expand our sector diversification beyond just mining and financials to better insulate us from global commodity stocks. Shocks. So that's all from me. Thank you for listening.
Alright, in week 8, our portfolio delivered a solid performance. Our total asset value increased from approximately 5.06 million rupiah to 5.445 million rupiah, resulting in a weekly gain of 392,000 rupiah or a 7.7% week-on-week return. This performance was mainly driven by the realization of gains from Bumi following a strong price breakout. In addition, Antam and Archie continued to contribute positively, supporting overall portfolio stability. The portfolio remains well balanced, combining realized profits, ongoing exposure to commodities, and disciplined capital allocation. As a result, we were able to grow asset value while maintaining a controlled risk profile. Then our key transactions, which is selling Bumi and buy Adro. During week 8, we made two key portfolio adjustments. First, we fully exited our position in Bumi. This decision was taken after a strong price breakout, allowing us to lock in accumulated gains and reduce the risk of a post-breakout price reversal. By exiting Bumi, we secured realized profits, lowered portfolio volatility, and improved capital efficiency by freeing funds from a high-risk, high-beta position. Second, the proceeds from the Bumi exit were reallocated into Adro. This allowed us to maintain exposure to the energy sector while shifting toward a stock with more stable price behavior and stronger fundamental support. This reallocation helped rebalance the portfolio by reducing overall risk, stabilizing short-term performance, and preserving upside potential through a more defensive energy name. And we also keeping positions and in the week 8. So in week 8 we maintained our positions in BBCA, Antam, and RT as these holdings continue to align with our portfolio thesis. BBCA was held as a defensive anchor, providing stability amid short-term market volatility despite relatively limited upside momentum. Meanwhile, Antam and RT were Meanwhile, Anthem and Archie were retained to sustain our exposure to the gold team. Both stocks showed resilient price action and continued to contribute positively to overall portfolio performance. Holding these positions reflects our conviction that the risk-reward profile remains attractive with no clear signals to aggressively add or exit at this stage. From a risk perspective, key challenges during week 8 include market volatility and commodity price fluctuations. These risks were actively managed through disciplined position sizing and portfolio flexibility. Looking ahead, our strategy remains focused on maintaining a defensive core while selectively rotating capital into high conviction opportunities to generate sustainable risk adjusted returns.